This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, December 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn down $0.0125 at 438.5. January soybeans were up 3/4 at 1072.5. And March Chicago wheat was down 5 3/4 at 515. No export sales announcements here this morning. We did get notebook crush out yesterday afternoon. 216.04 million bushels, slightly below the estimate, but still it was the second largest crush on record for any month. So still big crush numbers on the oil side. Oil stocks came in at 1.51. That was a 7-month high there on the oil stock. So good morning, guys. We're grinding into holiday markets here. Not much in the way of fresh news. No real fresh headlines. Still kind of jostling through the same info that we have been. But I guess with that, Dustin, what's on your mind here this morning? And then we'll throw it around the room.
Morning, Dan. Yeah, year-end stuff here. I mean, we're still getting that history lesson from CFTC commitment to traders catch up. And so we hit, within range of all-time highs. We saw funds bought about 1 billion bushels of beans in just about a month's time. And then this is the first report after those highs are made. And unsurprisingly, you're seeing them draw back a little bit in this report. It's still almost a month-old report, though. So, did they liquidate 500 million since then? Have they liquidated all billion that they purchased? We're back to levels in beans that we were below where we had a trade deal announcement. So I think that's a real question for, everything going forward. It's like, okay, we got this payment. We've got Reuters articles talking about how it's not enough. 12 billion for row crop farmers. The losses projected are closer to about 40 billion. And we have prices that are starting to slide again, even with Chinese buying. So I think there's a little bit of a fear going in. If you have low prices going into the new year, there's a lot more volume that needs to move to raise that same cash. We still had record cost of production last year. So I guess that's my main concern going forward is like once you get past the holiday timeframe when not a lot's moving, what happens after the first of the year? Is there just a big dump of corn and beans to raise cash? Maybe there's not. Maybe demand is just strong enough. But I think that's my biggest fear going into those Jan reports. If they're not bullish, that there's not a lot of excitement right now.
I'm kind of excited to see, in the next couple of weeks, once we get past, I think it's the, first week of January, when you get all the new structured product or custom products for crop insurance, and with the new subsidies that have been put into the big, beautiful bill. It's going to be interesting to see what you can do with crop insurance in conjunction with maybe some preseason marketing here after the first of the year as well. It should be good to look at.
Yeah, the way I would look at that, Dan, is like when you get low to negative margins, like you want to fall back to more Plan B type coverage, which is you want to make sure you don't lose your shirt farming, but you want to let things run a bit. Justin's talked about maybe there's some blue skies ahead. You have products like gold continuing to hit new all-time highs. The currency is not worth what it was last time prices were at these levels. So perhaps it's good to try to use things like insurance to set the guaranteed revenue floors for next year at a higher subsidy rate, and then just kind of lightly hedge around that instead of trying to do so aggressive marketing. That was the right thing to do last year for beans. I mean, like we're at 12-month highs for beans recently, kind of waiting to see how things go, just set floors and wait for a good selling opportunity. So,
and I may get this wrong, Dustin. You can correct me, but I think one of it was at the ECO or SCO not now being tied to your Ark County election as well was changed. I saw it was one of the announcement. SCO, yeah.
Yeah, so that was in the reconciliation bill. Last year, 2025, you're going to get the higher of either Ark County or PLC because that reconciliation bill changed it after the election period. But you're going to still have to make that election for next year, for 2026. Are you going to do Ark County or PLC for these products? The one nice thing about this year is that it doesn't really matter for SCO. Prior to this, you had to choose PLC in order to take the SCO option. And now you can still take Ark County if you deem that's better for you and still do SCO. And, oh, by the way, that's an 80% subsidized product, right? Like you can get a lot more coverage, county-based coverage at least, at a much lower rate in 2026.
Oh, very good. Justin, what's on your mind here this morning?
No, all good stuff. I would say if your crop insurance agent doesn't understand these things or how to use them in the market, then give us a call because it's going to be super important going forward. It's the cheapest dollars you can get, and I've talked about this a lot, but any trader would kill to be able to have tools like that to trade around. So to use it as a hedging tool and aggressive marketing or not aggressive, depending on how you view it, is such a game changer for people. To see the ones that succeed and don't in these tough environments, I think that's really key to have in place and to really understand it, not just buy it and forget about it. So if you use them correctly, they're super powerful. So as far as beans, not to be a broken record, I mean, it's a good history lesson. Now that we're getting commitment to traders, I think everything kind of makes sense when you look at a bean chart, what happened. Now the big thing is what now? Weather's probably just too good right now in Brazil to get too excited. I think it's getting to levels, I'll call it, here to 30 cents lower, where it's got to catch a bid if it's still going to be in a bull market or try to be in a bull market. You're hitting overnight, you're basically 100-day moving average, right? The 200-day is down, another 20 cents basically from here. Wheat, Chicago wheat overnight is testing contract lows. I think it got within a quarter cent. Kansas City's 6-7 cents away from contract lows. Soybean oil is on a big break. It's kind of turning bearish. So everything's kind of turning over now, and I think some of these markets are going to have to catch a bid soon if they still want to, support all these fresh longs that have come into the market. That's kind of my take there, and I don't know what fundamentally takes us there right now, unless you have a weather problem or some new biofuels announcement, which doesn't seem likely in the short run. It seems like they keep kicking that can down the road. So I'm just kind of looking for things. I just don't have a strong opinion here. I wish I did. I did think one thing was interesting when we talk about kind of currency devaluation and just maybe some inflationary things, like in the commitment of traders report that was as of, I think, December 1st, that came out yesterday. The fund sold 50,000 corn, but the index funds bought 22,000. So, if you look at, maybe there's just maybe first starts of like some more investment type money coming into commodities. Maybe it's just a one-time aberration, but something I noticed yesterday that I'd like to keep tracking, because as we get to towards the end of the year, into the first part of next year, right, you'll see these big index funds kind of rebalance or, either put more money in to commodities and or rebalance which ones they are in. So
I thought you made a good point before we started this morning, Justin, that you look at the pricing environment you've got for wheat, and you could stand to lose a considerable amount of acres. In your opinion, how does that shift everything? I know it's still
no, it's a good question. I do think we are losing. I mean, it's been a long time trend, right? It was a couple years ago, I think we had the lowest acres in 100 years. So that's definitely a long time trend. I think it continues. I think we lose more acres in hard red wheat for sure. what that goes into, Milo or, corn, beans, whatever. But I certainly think that's the market's trying to get that to happen. Like I said, we're on contract lows. Beans have come and corn have both, come quite a bit off the lows. So certainly not a lot of excitement in wheat country, I don't think. So we'll see. Well, we'll continue to see more, I guess, more corn, Milo, bean acres out, Western belt, like we have been.
Oh, very good. Got a couple minutes here. Ryland, pretty quiet start to the week for cattle. I know we're coming into a cattle on feed report later this week. And then I think the kind of the big news I saw yesterday into overnight was the anti-dumping stories that are starting to find their way into hogs, and we'll see what shakes out there. What are your thoughts?
Yeah, no, it was kind of a quiet trade to start the week. I think everybody just wants to see how cash is actually going to shape up. We got smaller show lists this week, and we got a little bit better weather. So I think that takes a little bit of the pressure off as well, just as far as transportation goes. So we've kind of running into resistance at the 100-day moving average. I think that, we're in kind of holiday mode right now. Volume was really light yesterday, so it just kind of feels like you got a lot of potential, shake up by Friday. But with the expectations of sharply lower placement numbers on this report, I think the narrative still holds true, and the market's kind of shrugged off some of the more sentiment-driven comments from the president. So it just kind of feels like a lot of cautious optimism to start the week, unless you see some big kind of sharp decline in futures, or we run into that 100-day and just kind of fall back. So I think, still looking for some pretty firm trade here. Beef was up again, so we got choice up 202 yesterday. So still some more positive, I think, fundamentals here, just in the interim. On the hog side of things, yeah, some of the news here, at least China imposing these 19.8% duties on pork from the EU. Maybe they start taking a look at U.S. products a little bit more to overcompensate, but likely more South American business is going to take that if there is any interruption in that. But overall, the market kind of took a pretty big nosedive yesterday and then snapped right back. We've seen that price action before last week and saw a lot of technical follow through. So I think there's going to be a lot of emphasis on that 100-day moving average resistance for the February. Cash markets tightening up here. You got cash up $1.40. You had carcass up 68. So even though we're in holiday mode, some wild things can happen. So I think that's what we're looking to test here today.
Very good. I appreciate the update there. Appreciate everybody that tunes in also on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.